Hello and welcome to another update video about gold. Gold is so far holding our upper support region. You might remember from previous videos that we are following here two scenarios. They are both bullish on the gold chart, and I'm going to the 4-hour chart first. Here the 4-hour time frame reveals that we're dealing with a larger ending diagonal pattern in this wave 5. All the waves in this fifth wave, which started in 2022 at the low in autumn 2022, in September, October it was. All these movements are ABC structures. That's at least currently the perspective. In the white count, we are dealing with an ABC structure from the wave 2 low. That's the last significant swing low from October 23. A wave up, B wave down, C wave up. That C wave might just need one more high, because we've already seen a 1, a 2, a 3. This is now the wave 4 pullback and should get one more high in wave 5. This is unchanged. The key support area that needs to hold is 2,260, but yeah, actually, ideally the last swing low is holding for that scenario. So yeah, there is a short-term bearish count, short-term bullish, and the distinguishing factor or the key level here that will basically that helps us distinguishes between the two is 2,285. It is that swing low from the 3rd of May. As long as that low is holding, now the focus could be on higher. It's just that it will not be possible really to confirm it from an Elliott wave point of view. As you can clearly see, this is an ABC structure to the upside from that 5th of May, no, what was that, 3rd of May low. And because it's a 3-wave move, it could easily be the yellow count, and I have to objectively prefer the yellow count, because we have seen a 5-wave move down, actually a 3-wave move down, 5 waves in the C wave, so it indicates the initial move down is complete. Okay, now that could be all of wave 4. It came quite low, but it's fine for a 4th wave, but the rally is so far only in a corrective structure, so I cannot clearly favor the white count in which the low is already in. However, because we're dealing with a larger diagonal pattern, it is likely that the rally is also an ABC structure in wave 5, and therefore these 3-wave corrective structures are definitely acceptable also in the 5th wave. So it means that we just have unclear probabilities. We just have to go with the levels, and I already gave you the key level against which we can focus on higher. Just be aware that a break below that low of the 3rd of May will likely confirm that we are in the C wave to the downside, which should minimally take the price to the 100% extension level of the initial decline. So we talk about it's the 100% extension, should take us to round about 2,227. But I will not be able to confirm it until we get some more price data. It just means that objectively, we can't confirm that a low is in. You can really only do that when we have a first 5-wave move up followed by a 3-wave pullback. That's not what's happening here. So it's not possible at this stage to confirm an overall end of this correction, which started end of April, or actually middle of April. And one more low is definitely a reasonable expectation, can definitely still happen. It's just that this move down, if I go to the 1-hour chart, I mean, the way to label this in wave C to the downside, we're normally then looking for a 5-wave decline, right? So it would be like a wave 1, a wave 2, a wave 3, 4, 5. This doesn't really look right. I mean, from looking at the proportions, this initial decline was a little bit too small. Definitely, it was too small to be wave 1 of wave C. So I'm not entirely sure what this would be. Maybe an AB of a wave 1 if we're dealing with wave C as an ending diagonal. So I would definitely say if the yellow count is unfolding, then the wave 1 is not yet complete. And that leaves the door open for both up and down, yeah, because this doesn't look great. I mean, it's not very clear what this is to me. I can give you a count. For me, this could be an A wave down of wave 1, yeah. So but that would, because it's only 3 waves down to me, this decline. Could be this, okay, and then wave 2 would be ABC, wave 3 would be ABC, and so on. And that would mean that the C wave is an ending diagonal. It just depends on which perspective you want to take. Do you want to take a short-term bearish perspective against the last high, or do you want to take a bullish perspective against this 3rd of May low? I think the overall trend is up, so the overall perspective should be bullish. So I wouldn't really necessarily want to take a short position here or perspective, just because this is an overall bullish market. Okay, there's no evidence for anything bearish. Also, the last decline was clearly just in 3 waves. So yeah, what can I say? You know, the situation hasn't really changed. I gave you the key levels. Just be aware that both scenarios are actually bullish. It's just that in the yellow count, we are adopting a short-term bearish perspective. But to make this more likely, it takes initially a break below 2,338, the A wave low there, and then, which would be much clearer, a break below 2,286. That's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.